Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 24th of June. So this week we're starting off the week with the US dollar in a completely different sort of trend directory to where it started at the beginning of last week. We've had a significant move to the short side on US dollar, and now that's put it into confirmed short trends across all of the time frames on that market. We've also starting a week here where traders are starting to focus towards the G20 meeting towards the end of this week. We've also got the Iranian US tensions increasing in the Middle East, and also the US and China trade situation as well. So plenty there for traders to keep focused on. So let's take a look at a few markets here that we're keeping an eye on in the trading room this week. Now, if we come take a look at the Dow first of all, this is the Dow futures contract. This market, again, like the US dollar, completely changed direction. We were looking at a confirmed short trend on these markets, and we going into the summer with weaker prices in stock indices, and now that's sort of completely turned around. So now we're seeing the market sort of retesting the old high, or the all-time highs, I should say, here in most of these markets, the S&Ps included. Now, the key 27,000 level there, market's just knocking on the door of that, and I've marked my level in just underneath that price point, because this is where the previous highs are within this context of this market, just underneath that 27,000 level. So the question is now, I suppose, is the market going to break through 27,000? We're going to see higher prices going forward, or is this going to be another resistance area and looking for lower prices in the sort of coming week and weeks going forward? Well, if we come and have a look at this on the daily time frame, we can see that we've got a good, well-structured long trend forming here. Moving averages in the right order, convergence. There's no sign of weakness at the moment in the context of this trend, although the market is looking a little bit stretched in the context of the daily time frame. So some kind of retracement, possibly back into 26,500, would be a very nice sort of value area for positions, for new positions in this market, and certainly something, an area which I'm very keen on if the market retraces back there. However, if we come to the 4-hour time frame, we can see that the market sort of just consolidating above this sort of 26 700 area at the moment, finding a bit of support there currently, and there is a reasonable trend structure here. However, there is a few signs here of divergence, a few signs of weakness starting to come in. Now, this is a market at this moment in time is very much for intraday playing for me, and if the market can break this sort of consolidation here, then we're going to see a move back, looking for a move back towards that 26,500 area. That's the area that we were looking at on the daily time frame. If it can hold above here then and start to get higher prices in intraday price action today, then we could be looking for a test of that 27,000 later on, sort of fairly quickly. For longer term perspective, I'm looking at intraday trading on these markets around these levels, and certainly looking at not looking at any new sort of swing plays until we get above that 27,000 area comfortably. Now, if we come and have a look at oil, again, oil was a market that we were looking at last week, and we took opportunities in between the $55 level up to that $58 level. This was the trading window that we were looking at last week, and we discussed on last Wednesday's newsletter. Now, the market sort of fairly swiftly covered that distance and is now knocking on the door of 58. We did manage to capture some nice trades here in the trading room during this sort of trading window. And again, if we think about going forward, what is likely to happen here? Are we still looking for long prices on oil, or are we looking for sort of weaker prices? Well, we think with the tensions in the Middle East at the moment, this is one of the things that's driving oil prices higher. We've also got, obviously strong prices in oil, and also we've seen many sort of policymakers coming out saying that they're comfortable with oil price sitting between sort of $60 to $70 a barrel level, and that sort of puts it significantly above the 58 level where it is at the moment. So there seems to be sort of a reasonable amount of support for the stronger oil prices going into the beginning of this week. Now, because the market's sort of looking a little bit stretched from this sort of 58 level on these higher time frames, we need to really sort of come down to lower time frames to look for technical setups. My preference is looking for opportunities on the sort of mid time frames, that's the 4 hour, down to the sort of 60-minute time frame, looking at opportunities on those time frames above that 58 level, up towards that first initial trading window, up towards that $60 50 cents level. If we can get above $60 50 cents, then we'll be looking up towards that sort of 65 price point. Now, when we come to Forex markets, and again, thinking about US dollar weakness, one of the markets here that I like is dollar yen. Now, dollar yen has been particularly weak for some time, but it's not necessarily been as tradable as some of the other markets. So for a long time, we've had strength in the yen, where yen has been seen as a safe haven, but the strength of the dollar has also been sort of holding that up and holding this market up. With the weakness in the dollar, this is now sort of released, and we've seen sort of weakness here in the dollar yen charts. Now, on the weekly perspective here, we can see that the market has had a big sell-off. It's broken through a very key level at the 108 price point, and it's just kind of sitting around here around 107, around 107 sort of 38, 107.40, and I've got a light level in there. If you just look back through here, there are previous tests of previous support and resistance around this price point. It's not as strong, what I would class as a strong structure point, but it's certainly a support and resistance level that's been tested multiple times. But underneath that, there doesn't look an awful lot in the way down towards 105, 250, and then just below that, that key 104 level. These are the levels that I'm looking at on the sort of mid-term over the next few weeks. So I'm liking dollar yen to the short side, looking at some of these intraday opportunities on these sort of mid-time frames. I think are looking sort of fairly interesting, where the market's now started to pick up some trend here and started to pick up some geometry as well. So again, our focus is going to be on short dollar, and dollar yen is going to be one of those markets that we'll be looking for position opportunities on. So there's a few markets that we're keeping a close eye on this week in the trading room. I certainly hope it helps, and look forward to speaking to you on Wednesday's update. Bye for now.